People that are still waiting for a pullback. Oh, I don't want to buy $3,300 gold. I don't want to buy $36 silver. Well, if you don't want to buy $3,300 gold, be prepared to buy $3,600 gold or $4,000 gold, right? Because it's more likely to go up than down. I think we're near the bottom in both gold and silver. So don't press your luck. Don't hope for a big drop so you could buy more. Just buy more right now. And if you don't own any gold and silver, well, you better make sure and buy some right now. People that are still waiting for a pullback. Oh, I don't want to buy $3,300 gold. I don't want to buy $36 silver. Well, if you don't want to buy $3,300 gold, be prepared to buy $3,600 gold or $4,000 gold, right? Because it's more likely to go up than down. I think we're near the bottom in both gold and silver. So don't press your luck. Don't hope for a big drop so you could buy more. Just buy more right now. And if you don't own any gold and silver, well, you better make sure and buy some right now.
Its asset portfolio and leveraging the stability and value of gold bullion. The financing plan is part of a broader trend in the financial industry where traditional institutions are increasingly exploring the integration of real-world assets with digital financial instruments. By backing this project, Cantor Fitzgerald aims to enhance the liquidity and accessibility of gold bullion, making it more attractive to a wider range of investors. This initiative also aligns with the growing demand for stable and secure investment options in an increasingly volatile market. The decision to focus on gold bullion is particularly noteworthy given its historical role as a safe haven asset. Gold has long been recognized for its ability to maintain value during economic uncertainties, making it an ideal choice for investors seeking stability. By tokenizing gold bullion, the project aims to bridge the gap between traditional and digital assets, offering investors the benefits of both worlds. The $1.1 billion financing plan is a testament to the confidence that Cantor Fitzgerald has in the potential of this project. The firm's involvement not only provides financial backing, but also lends credibility to the initiative, given its extensive experience in the financial services sector. This backing is expected to attract further investment and support from other institutions and investors, further bolstering the project's prospects. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
The only reason the stock market is still making new highs is because nobody believes him anymore. He's like, the boy who cried tariff. People think it doesn't matter what Trump says, right? There's not going to be any tariffs. Maybe it's kind of like the Epstein files, right? Oh, I'm going to release them. I'm going to release them. Oh, they don't even exist. There's nothing to release. Don't even ask me about that topic. I can't believe you even care about this. Why are we still getting questions, right? He quickly transitioned out of Epstein, and maybe people think, well, the same thing's going to happen with the tariffs, right? He's talking about it. He's making a lot of noise, but at the end of the day, when it comes to tariffs, he is all bark and no bite. Well, I don't know. I mean, Trump's got an ego. I don't think he likes being called a taco. I don't think he likes being called a chicken, that he's chickening out. I remember if you ever watched, Back to the Future, but Marty didn't like being called chicken, right? And so he would do some crazy things if you called him chicken. Well, maybe he's a bit like Marty McFly. I don't think Donald Trump likes to be known as a chicken. And even though the market's tanked, the fact that they're not tanking now may, fool Trump into thinking that he can have these tariffs and see the market is going up. Even though I've announced these high tariffs, the market's still going up. He may not understand that the market's going up because nobody believes him, that everybody thinks he's going to chicken out. But again, he may just have to prove everybody how much courage he has, right? That he's not a chicken, right? And he may let these tariffs go into effect. And in that respect, the markets are playing literally a game of chicken. Because if Trump doesn't blink, if we actually do get these tariffs, I think we repeat what happened in April. I think we're going down in the stock market, we're going down in the bond market, and we're going down in the dollar, and we're going up in gold. In the meantime, people should be buying gold. They should be buying silver. I think we go up regardless of what happens. And I know a lot of people are still worried about buying gold and silver, right? There are people that are still waiting for a pullback. Oh, I don't want to buy $3,300 gold. I don't want to buy $36 silver. Well, if you don't want to buy $3,300 gold, be prepared to buy $3,600 gold or $4,000 gold, right? Because it's more likely to go up than down. I think we're near the bottom in both gold and silver. So don't press your luck. Don't hope for a big drop so you could buy more. Just buy more right now. And if you don't own any gold and silver, well, you better make sure and buy some right now.
In today's news recap, silver slips on stronger dollar yields. Silver prices slipped to around $36.50 per ounce on Wednesday, marking their third consecutive decline as a stronger U.S. dollar and rising Treasury yields weighed on precious metals. The moves came amid renewed concerns over U.S. trade policy following a series of aggressive tariff announcements from President Donald Trump. He ruled out any extension to the newly imposed tariffs targeting 14 countries set to take effect on August 1st. He also unveiled a 50% tariff on copper imports and threatened to impose levies of up to 200% on pharmaceutical imports, though implementation would be delayed by 12 to 18 months to allow for industry adjustments. Meanwhile, investors are awaiting the release of the latest Federal Open Market Committee minutes for clues on the Federal Reserve's policy outlook. A stronger than expected U.S. jobs report for June has dampened hopes for imminent rate cuts, further supporting the dollar and yields, both typically bearish for silver. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Trump just announced, I think yesterday, 50% tariffs on copper, which sent copper prices soaring by over 10%, over, I think, $5.50 a pound. No all-time record high on copper, although copper has pulled back a bit. But again, it's not really a tariff on copper, right? It's Americans who want to buy copper. Now, most Americans don't directly go out and buy a bunch of copper. It's companies that buy copper. Americans buy products that contain copper, right? Or if they buy houses, right? There's a lot of copper in your house, right? So you don't buy the copper, you just buy the house that has a lot of copper in it. But everybody who's buying products that contain copper, well, those products are going to be more expensive because the copper is more expensive. Look, it doesn't matter why the cost goes up, right? If the cost goes up because of a tariff, it's the same thing as it going up for any other reason, right? Your energy costs go up, your wages go up, your insurance cost goes up. Whatever the cost of production is, that's going to be embedded in the price. I mean, how can somebody think that that businesses pass on all their costs except tariffs? They just decide, well, we're just going to eat those. That's not how it works. They're indifferent. They're all costs. Like the only time I think that a company may decide to eat some of the tariff, like the exporters, might be if there's really a viable U.S. alternative and they don't want to lose out on their market share and they may be willing to accept slightly lower margins, so eat some of it. But in many cases, there is no U.S. domestic alternative. We've got to buy and import. And if all these countries are facing tariffs, well, they all pass them on because it doesn't put anybody at a competitive disadvantage because everybody's got to build tariffs into their price structure. But the bottom line is prices are going up. You know, a lot of people are looking at the tariffs we have so far and they're saying, oh, you see, the CPI hasn't really shot up, so tariffs aren't causing inflation. Now, tariffs don't cause inflation directly. Indirectly, there's going to be a lot more inflation as a result of these tariffs because of what the Fed does to monetize the larger deficits that the weaker economy, and in part the tariffs are going to weaken the economy, are going to produce, and the fact that these tariffs will trap more of our dollars in the U.S., so we'll export fewer dollars abroad, and so those dollars won't come back to buy our bonds and to buy our stocks. They'll stay in America to buy whatever products and services we have, bidding up those prices. So we are going to see higher inflation. But one of the main reasons that a lot of the goods that are impacted by the tariffs haven't seen bigger price increases yet is because there is a lag. A lot of the goods that Americans have been buying the last couple of months were imported before the tariffs were in effect. And so businesses didn't have to pay the cost yet on those goods. Well, now, more goods are coming in that have been subject to the tariffs. And now you're going to start to see those higher costs being passed on to the consumer. And again, initially too, businesses are not really sure how long the tariffs are going to be there. Rather than raising my prices, maybe I'll eat a little bit of it now just to wait and see. But if the tariffs are still there, well, okay, I'm going to pass them on. That's going to happen. And now we'll see what happens because the new deadline for all these tariffs is August 1st. So Trump extended the deadlines. It was initially 2 months, which was supposed to be up, I think, next week, right? That was going to be 2 months from Liberation Day because Liberation Day or 3 months, 90 days. It was a 90-day pause. So Liberation Day was April 2nd, right? The new April Fool's Day. And then he called it off like a week later. So call that maybe it was April 9th. And so July 9th, that's about where we are. So this is when all the reciprocal tariffs were supposed to come back. And so he tacoed out again, at least till August 1st. But Trump came out and said, that's it. August 1st is the deadline, and we're not moving it again. So either we have new deals or everybody pays the rate that I assign. And all these new deals, the 25% tariffs on Japan and Korea, 50% Brazil, I guess all the other, he's announced, I don't know, a dozen other countries have been hit with tariffs from between 20 and 40%, meaning Americans are going to be paying 20 to 40% tariffs, not all these countries.
What do you think of Schiff's take? Do you agree with him? Are you buying more gold and silver at these prices? Or on the contrary, are you selling like most other retails? Post your honest opinion in the comments section down below and share your gold and silver price predictions with the Stacker community. Now check out this next video right here because it's the perfect follow-up for you. I'll see you on the other side.